What's up, everybody? All right, we're getting pretty dang close to the election. Today is October 28th, and we're, 2 weeks away from election day. So I'm actually going to do a quick breakdown of Kamala Harris's tax plan. I'm also going to do one for Trump's tax plan as well, so you can go check out that video. I am a big believer in what Dave Ramsey says right here, so I'm going to play a clip for you real quick.
What happens at your house is a whole lot more important to your future than what happens in the White House.
And I recognize that, yes, it is more important what you do in your own home than what's going on in the White House. But that does not mean that what's going on in the White House shouldn't concern you. You shouldn't vote on it. You shouldn't think about it. But you have much more of an ability to control your life in your own home with your money habits. So be smart with your money. All right, let's jump in. So Harris's tax plan, I've got this document up. This is from their Harris and Walls economic policy book. So right here, cut taxes for working people. So one of the things they floated is restoring the expanded child tax credit to $3,600. So currently it's at $2,000. It temporarily was bumped up to $3,600 when we had all that COVID crap. Is big old stimulus trying to send money to people when they didn't have jobs. So they're thinking, hey, let's kick it to $3,600. Now I'd be interested to see how much of that tax credit is refundable versus non-refundable. Now the difference in that is if you have a tax bill and say the tax that you actually owe is $2,000 at the end of the year, you owe $2,000 in federal income tax, and there was a child tax credit of $3,600. If that's non-refundable, then that means that $3,600 will go to pay your $2,000 tax bill, but that's it. You won't get the $1,600. It'll just use it up to the point of your tax liability and will not go beyond that. Now, if it is refundable, then you could say, okay, hey, the government's going to say, hey, not only are we going to wipe out your $2,000 tax expense, we're actually going to give you the remaining $1,600 in that credit for having a child. So right now, a chunk of it's refundable, a chunk of it's not refundable. The $2,000 child tax credit that's in place right now. I don't know what this is going to be with the $3,600. So another thing that they've thought about doing is a new child tax credit, a tax cut, $6,000 for those who have a child born in that year. So they're going to have a tax cut to help families pay for the high cost of a child's first year, $6,000. And then they floated the idea of expanding the earned income tax credit. This is essentially an expansion to help those that hardly make any money. You have to have below a certain threshold to even be eligible for an earned income tax credit. And so you'd have $1,500 there to decrease the taxes. Now, a thing that gets floated a lot by Kamala and Walls is right here. They will make sure that no one earning less than $400,000 a year will pay more taxes, which cool. They won't pay more taxes. I'm all for let's pay a heck of a lot more less taxes, because taxation is theft. Honestly, it's a joke. So yeah, those are some of the tax cuts. Now, the way that they're even going to be able to afford these tax cuts, if we go back up here, I'm going to go right here, to make our tax code more fair and promote growth. More fair is a very interesting way to put it. So once again, they're saying, hey, anybody under $400,000, you're not going to pay more taxes. They're going to make the wealthiest Americans play by the same rules as the middle class, which is crazy, because if you look at how much taxes get paid by the wealthy, it is a large majority. Let's see. How much percentage of taxes are paid by wealthy? It's ridiculous amounts. I'll have to go find it. If I can't find it, I'm not going to worry about it. The top 1% income share rose from 22%, and its share of federal income tax is paid. So the top 1% pay 45% of our income tax. So, they're paying their fair share, in my opinion. They're paying more than their fair share if you look at it at a percentage basis, right? 1% of income earners are paying 46% of the tax. That's a high one. So anyways, they're like, and another one is they're going to, I don't know if it's on here. If it's not on here, it's definitely on this one. Child tax credit, estate, corporate tax, right here. Oh, it's right here. All right. So yeah, right here, Harris wants to raise corporate tax to 28%. So that means all of the corporations in the United States are going to be paying 28% tax. Another one is capital gains. This one's a huge one. This is a big difference between the two of them. Let's see, capital gains. Right here, Harris, on the other hand, would raise the 20% long-term capital gains rate to 28%. So you're going to be taxed even higher on things that you've held for long-term, any investments that you have. And then right here, this one's crazy to me. Harris's most controversial one is unrealized gains tax. So typically, on an investment, you are only taxed on it when you realize a gain, meaning that you bought it, you held it for a while, you sold it, and you sold it as a gain. When you sell it, that gain becomes realized because you actually got cash. You sold it, you got cash. So she's proposing that we are taxed on unrealized gains. Now she says that it's only going to be for those who, I believe, make $100 million, right? Or something super high. But that's still crazy to me that even if you don't sell an investment, you could be taxed on the gain on that investment. To me, it just seems like if we tax more on things, if we tax the rich, if we raise corporate tax, if we are increasing capital gains tax, and we are taxing on unrealized gains, the wealthy are smart. They are wealthy because they are smart individuals, and they will just find different ways to make money. So if you raise their corporate income tax, CEOs are going to be like, okay, well, how can I make a better margin on this? So that might result in people being paid less, or, they're not going to give people raises because their job, their duty, their shareholders are demanding that they maintain a certain margin on their corporate income. And so if we automatically come in and say, okay, well, we're going to jump the tax rates up, then they're going to have to try and make up that margin in a different way. And so it's going to end up hurting the lower and middle class because they are not going to be getting pay raises. They're going to find ways to automate things and not have as many workers. Like, they're still going to figure out things. So I don't think the solution is to raise taxes ever. Like, that's very rarely a solution, is to raise tax. In my head, it's always to cut tax and then let the free market run. But what do you guys think? Hit me up in the comment section. Let me know what you think of Kamala Harris's tax plan.